So we're very glad to have ASX-listed company Grand Gulf Energy new appointed managing director, Mr. Dean Lance, with us today. Welcome, Dean.
Welcome. Thanks for having us, Steph.
Grand Gulf Energy, the trading code is GGE. Could you please give us a brief introduction of the assets of the company and its most prioritized projects, please?
Yeah, thanks, Steph. Well, Grand Gulf recently made a strategic pivot to a pure play helium exploration with the acquisition of the Red Helium project in September 21. And that's our primary priority at the moment. It's located in the Paradox Basin in Utah in the Four Corners area, and that's a prolific producing helium province. And we're really excited about it. It's got huge potential. And the market responded very positively post-acquisition. Earlier this month, we announced the maiden pure helium well, Jesse 1, is set to spud in mid-April. Now, this is a high-impact well targeting a huge potential resource. It's potentially company-making for us. And it's right next door, only 15 miles away from a huge producing analogue, Doe Canyon. The anticipated recovery of Doe Canyon's around 3 to 5 billion cubic feet of helium, and it has really high helium rate wells, and we see similar geology where we are. But our map structural closure is actually 4 to 5 times that of Doe Canyon, so it's potentially a really big resource. Now, that fed into our December 21 update to the market of our maiden gross prospective resource booking, and that had a P50 value of 10.9 billion cubic feet. Now, to put that in context, annual global supply is somewhere around 6 billion cubic feet, and that's a multi-billion-dollar market. So on top of that, the market's experiencing what's termed helium shortage V4.0, and we've seen massive price rises from 300 per thousand cubic feet up to 600. And that's created a lot of market visibility, and a lot of people are looking for helium exposure. And we think we make a great risk reward proposition, and we're above the curve. And I'll get into why that is later. But if you put that price together with our almost 11 billion cubic feet of helium, it's a massive value proposition. And just to put that in perspective, for those that aren't that familiar with the helium market, it has essentially over 100 times price multiplier to natural gas. So it's equivalent to talking about a 1 TCF natural gas project. So we're a company of market cap somewhere around 45 million at the moment, and that's a giant prospect, and it's going to be tested in under a month with Jesse 1. Adding to that, we've recently announced a helium offtake agreement, and that gives us the ability to near immediately monetize a success case Jesse and generate free cash flow for the company. And all those announcements, the market's responded pretty well over the last month. I think last I checked, we're up from 2.6 cents to somewhere in 3.7 cents.
Okay, sounds great. So as the new managing director of the Grand Gulf, could you please give us a background introduction of yourself and your reasons for taking the drive of the company? Also, is there any big changes on the growth strategy before and after you joined?
Okay, sure. So starting with me, I've got 18 years experience in the upstream E&P business across 4 continents. I've worked with Woodside Energy, Ophir Energy and Oil Search, and I've contributed to a final investment decision on 5 major and mega development projects, including Pluto LNG project. Along the way, I've had extensive exploration, business development and AMD experience. But, starting out, I was a reservoir engineer in the trenches, delivering wells, optimizing production, getting reservoir management right. So I think one of my strengths and what I can bring is I really know the value of getting the early decisions right and front-end loading in a development project. So onto Grand Gulf, I was interested in the helium market, and I was following the company post the Red acquisition. I also know the technical director, Keith Martins, and we discussed some previous opportunities. So as I got to know the team, it turns out they're all great people, which is important in not just in life, but to have a functioning team and for project delivery. And so as I got into the technical details, for me, the story really held together, it's the real deal. And the project has huge potential. And on top of that, getting to know the team, they have the talent to deliver the project. It's worth mentioning here our partner, Four Corners Helium. It's led by CEO Tim Rinnott. But yeah, so Grand Gulf, they're in a phase of exploration, but potentially moving into a rapid development project. And I really think I have a complementary skill set to that, and I can help deliver the project. So I think we've sort of almost got the management team trifecta. You've got Keith Martins, 40 years geology and exploration, Mark Freeman, 25 years oil and gas, commercial and corporate finance, and then myself. I bring that extra development experience and a bit of commercial too. And on top of that, we've got our chairman, Craig Burton, who's seen a lot of companies and projects. So he's got that forest for the trees view for us. And, you know, we're all aligned on maximising shareholder value with rapid resource maturation and monetisation, whilst focusing on project delivery and good corporate governance. And you mentioned Gge Growth Strategy. It's fair to say we're open to strategically aligned opportunities at the moment, but really with the Red project and Jesse 1, our focus is just delivering a safe, successful Jesse 1 at the moment.
So for the helium industry, please tell us a bit more about the helium market and economy, please.
Yeah, so listen, it's a fascinating commodity and a fascinating market. I could talk for hours about the element itself and the market and the uses. I won't put you through all that, but I've really enjoyed learning about it myself. So succinctly, hopefully, it really is a critical technological enabler, and it has inelastic demand, and it's irreplaceable in several cutting-edge industries. Some examples are space, semiconductors, medical, and, you know, high-end technological research. And we see huge growth in all these areas over the coming years. Now, the market itself is facing what's termed helium shortage v4.0 with major supply side issues. We've had a devastating fire at the Amur plant, which has taken out, you know, 10 to 20% of potential global capacity. There's ongoing depletion and divestment of the US federal helium reserves, and maintenance issues at Cliffside BML facility have impacted over 20% of US supply. That's just to name a few. And unfortunately, the world we live in as well, there's increasing geopolitical tensions that are only exacerbating the situation. So we see the supply-demand gap extending into 2023, and there's major price increases going on. You know, we'll talk about it later, but right next door, we've got quoted $600 per thousand cubic feet.
Yeah, that's a market with great growth potentials.
Yeah, it really does. It really does. And it's an interesting market as well, because historically it's been a very opaque market. You know, there's not clear pricing signals, and it hasn't had a lot of visibility to the market. But I think with the recent price rises, it's gaining a lot of optics and visibilities as well. And a lot of astute investors are looking for helium exposure. And we really think we make a great risk-reward proposition, and we're above the curve. And one of the reasons is just the massive upside we're talking about. And that's going to be tested in under a month with Jesse 1. And so we think it's a differentiator to our peers. You know, our ability to discover and supply helium in a short period, very short time period, to a critically undersupplied US market.
Wow. So at the current focus project, tell us a bit more about the Red Helium project and its advantages. So in other words, why we should believe it is a great choice?
Yeah, so, you know, I've got location, geology, infrastructure, monetisation, the team, and environment. I'll just start with the environment in that, you know, the strategic pivot for the company to a non-hydrocarbon and helium pure play is a bit of an ESG differentiator for us. And then if we get into the actual meat of the project itself, you know, location, geology, resource, infrastructure, and monetisation, it's a pretty good story, and it all hangs together. It's got it all. So starting with location, we're definitely in the right postcode. The Four Corners area is a proven prolific helium producing province. And I mentioned the producing analogue. It's within 15 miles of a Stowe Canyon. It's got the anticipated recovery of 3 to 5 billion cubic feet, and our structural mapping is 4 to 5 times that of Doe. Now, Doe has very high rate gas wells. The average helium grade at Doe is around 0.5%. And a lot of the wells have upside on that and produce higher, and we see upside in our project. But quite often the market doesn't realise it's not all about helium grade. because really the helium rate is your revenue stream. So if you have these high rate wells, you can have a very high helium rate. And for example, an average helium rate at Doe is around 100,000 cubic feet per day with slow decline. And, you know, it's pretty easy math multiplying that by 300 to 600 per thousand cubic feet. It's a significant revenue stream. Moving on to geology. This is an exploration project, right? So there's a natural risk reward proposition. I think there's a couple of reasons we believe we're above the curve. We have this huge upside, and some of the elements in the play are already de-risked. So we have historic hydrocarbon targeting wells in the project area de-risk many geologic elements. So they've demonstrated trap, seal, reservoir presence and gas charge. And, you know, that lower geologic risk is quite different to many exploration projects. So it's a differentiator to some of our peers who are much earlier in the de-risking phase. So the two main risks we're carrying are really helium presence and concentration and reservoir deliverability or flow rate. So on helium, we have evidence of a working helium system in the area and the project area, but we need to test that on the prospect itself. On flow rates, we're actually targeting what's known as the Mississippian Leadville Dolomite Formation. And this is a well-known prolific formation. It actually extends all the way down to the Permian Basin where it's producing. And we have the Doe Canyon analog, which I've mentioned a few times, which has high deliverability wells, and we're targeting similar. And so the Jesse 1 exploration well is going to test both these elements. Now, I won't get into it too much here, but we also see running room and upside on the block as well. There's several other underexplored deeper zones with helium potential. And so now, location, geology, resource, this is probably my favourite one. I think this is the kicker, is we've got a size that really moves the needle. As I said, the project gross P50 prospective resource is 10.9 billion cubic feet. And I mentioned global annual supply, that's 6 billion cubic feet. So it's about 175% of annual supply. And Jesse 1 will go a long way to de-risking a large part of that. So it's a high impact well. And I think the sheer scale of the size of the project is a differentiator to some of our peers. So finally, getting on to infrastructure and monetisation, you know, we're in a good postcode, as I said. There's a lot of significant dedicated infrastructure nearby. We're pipelines with ullage. We're within 20 miles of 2 of the 8 helium purification plants in the US. And as we recently announced, we've signed a helium offtake with Paradox Resources. So that allows for near immediate monetisation of resource. And that differentiates the project from many of our peers who have a longer development life cycle. And just on that project delivery and resource maturation, I think it's worth mentioning to the team's efforts. You know, we're 6 months from acquisition to spudding Jesse 1, and we're in line with our original timelines and cost estimates. So I think that's really testament to the team and the company's commitment to project delivery. And that leads me on to having the team to deliver. You know, Four Corners Helium, led by Tim Rinner, has over 400 years experience, with much of it in the Four Corners area and the Paradox Basin. And we recently signed a drilling supervisor, Doug Frederick, he's drilled Leadville Formation wells in Doe Canyon. He's drilled them with our drilling contractor, Aztec, and he's familiar with the Aztec 1099 rig we'll be drilling the well with. He's a huge asset for us.
So you've mentioned about the announcements recently. We also noticed that the announcement regarding to the helium offtake agreement. How did this partnership come about, and what does it mean to the project?
Yeah, so we're really excited about this, and it was a great announcement. So Paradox Resources, they're the owner of one of the gas plants I mentioned, the Lisbon Gas Valley Processing Plant, 20 miles north. They're a major proven helium refiner and seller. They have deep helium processing and marketing experience in the premium North American helium market. So talks have been underway for a while with Paradox. And, you know, they looked at the technical basis and the resource size of Jesse 1 and the Red Helium project, and were very interested. And that's where the partnership came from. And they're a competent operator. So we take that as a huge validation of the technical merits and commercial potential of this project. And, you know, it just makes sense, to be honest. Jesse 1 is immediately adjacent to pipeline connected to the Lisbon Valley gas plant, and they have spare helium purification capacity. And as I said, that recently they've realised prices of over $600 per 1,000 cubic feet. They also have liquefaction capability, and that purifies the helium to 5.59. So that's 99.9995%. And that attracts premium pricing, and it opens up those premium markets as well, like medical, space and semiconductors. And on that, it's just worth mentioning, you know, one of the 10 largest companies in the world, the Taiwan Semiconductor Manufacturing Corporation, is building a massive $12 billion plant and it's going to be a helium-hungry plant down the road in Arizona. And they're already talking about tripling capacity of that. And other large companies like SpaceX and Tesla are crying out for helium. But so at the end of the day, in terms of the deal, it's just a win-win for both of us. We get line of sight to monetisation, generating free cash flow from a successful Jesse 1 with minimal capex and time delay. And, you know, given the synergies of our businesses between Paradox and Grand Gulf, we're looking forward to exploring future strategic opportunities together. But what does it mean to the Red Helium project? Well, there's the potential for those early free cash flows to help with funding. But along with that, we potentially get ongoing reservoir information from an early Jesse 1 production. And both those things are enablers to accelerate the development. But I just want to take a step back from the offtake agreement as well, because whilst we see significant economic value in the Jesse 1 to Lisbon project, we also want to keep our eyes on the greater prize. And, you know, the initial volumes we're talking about in this stage of the project are only a few percent of the Red Helium potential. So there's a much greater value proposition here that we need to keep up in the lights.
So for this first drilling, like for the first well, it says like it's ready to spud in April. So how's the permitting and other preparation jobs going?
Yeah, so everything's on track. We've announced we've got the signed rig contract. Permitting's ahead of schedule. Site preparation work's underway to support that mid-April spud date. And I have to say, compared to some other regulatory environments, it's been a pretty smooth process. We're in the pretty drill-friendly state of Utah, and we have good comms with UDOGM, which is a state regulator, and they're very supportive of our well, and there's minimal red tape. And that's not always true in some other states of the US or other areas of the world. So that's a great advantage of where the project location is. Now, the team's also advancing permitting process for future appraisal, development locations. We're looking at some engineering studies, and we're getting all these ducks in a row so we can move quickly on a Jesse 1 discovery and progress the greater project. On top of that, we're comfortable with our over 29,000 gross acres that we have. And, you know, these acres, they're all prime prospective resource locations over the project. So in our mind, they're almost all useful acres. And this isn't always the case with some other companies out there. That said, we do have key areas within the project area prioritised and initiated should we choose to increase our position. So everything's green light and go from our side.
Great. So for the maiden drilling, how is that designed and how long it would take, roughly?
Yeah, so Jesse 1, spudding in under a month. Very excited about it. It's designed to address the two key uncertainties I referenced previously, and that's helium concentration and flow rates. And of course, along the way, we're going to gather as much reservoir information as we can to optimise the development project. So, but proving up those two key risks, we've actually gone for quite a conservative design, and we're only going to drill the primary target, which is the Leadville Dolomite Formation. As I mentioned, there's running room. There's further prospective zones deeper, but that's something for later. We expect the well to take around 10 days to drill, 2 to log, and 10 to complete and flow test. And we're going to leave the well completed and ready in a state to tie into the pipeline to the Lisbon gas facility.
So beside the Red Helium project, is there any other plan for project acquisition or disposal? So
no plans at the moment. As I've previously said, we're 100% focused on delivering a safe, successful Jesse 1. Now that said, it is, given the high energy prices, it is a natural time to reevaluate the asset portfolio, but it's all about Jesse 1 at the moment.
I understand. So the recent announcements also mentioned about the listing on US-based OTCQB. Could you please tell us a bit more about this?
Yeah, another thing we're excited about. It sort of makes sense. So given the location of the company's assets in the US and the offtake agreement signed by Paradox, a North American company, the OTC was a natural choice. And trading on the OTC is going to enhance our visibility and accessibility to North American shareholders and media partners. So we expect that to happen in the coming few weeks.
Anything else you believe the market should expect from the company for the next few months?
Really just an exciting ongoing news story in the lead up to the execution and drilling of Jesse 1. It's, as I've said, it's a huge high impact well, potentially company making for us. So we're really just looking forward to keeping the market informed as it develops.
Thank you, Dane, for your time and sharing. Believe the Grand Gulf will bring us more exciting news, and we're looking forward to witness the success of the first well and the Red Helium project as a whole.
I appreciate your time, Steph. Thank you.
Thank you.